Yeah, I just had a issue with the camera and so on. So we are back up again, right? We are back up again. So just sharing the
References from home interface. Systems are now fully operational.
Yes, good night, Forex traders. Please like, share, subscribe. We are here again. We had a small difficulty. Um, yeah. So we are here back to it again. Uh, just 1 minute. I didn't fully sort it out. Um, open my charts. 84. Right. We understand that the yen, Swiss franc, is gaining some momentum based on the uncertainty in the market, safe events running, right? So that is really, yeah, that is really the situation right now. Uh, Gold still pushing higher. Uh, we had a little pullback. Market gap up, went up, pull back, and is in a sideways motion right now. But basically, what we are really seeing is we have an understanding already the virus and the uncertainty in the market. So that's why we're seeing the Swiss francs and the yen gaining some momentum. Yeah, good night, chaser, respect, right? So where that is concerned, you can develop a bias, right? So when you have a bias in the market, it makes trading less complicated, right? It makes trading less complicated, right? So with that being said, we all know when there are uncertainties in the market, right? These currencies tend to gain some strengths, right? We have the yen, the Swiss francs, and the oftentimes the US dollar, right? And we have commodities, gold, silver, tend to pick up some momentum. So based on that now, all we have to do now is just look for a technical setup to execute those positions, right? Each time it pull back, you execute the position, right? So uh, this is the yen. This is the CAD Swiss franc, and we are on the 4-hour time frame. Also, this is the 4-hour time frame. I'm going to drill it down to a 1 hour, right? A 1 hour. So we understand that oil is going down in value, right? And we already know that CAD is a big exporter of oil. So therefore, we're looking for the CAD currency to depreciate in value, right? So right away, we have a bias selling CAD. We're selling CAD. We're buying safe events asset, safe events currency to benefit from it. And that is the beautiful thing with Forex, and it's one of the most, basically it's recession proof, right? All you have to do is just apply yourself, put in the work, and you understand. When there's turmoil or uncertainty in the market, one thing happen, and when the world is healthy, another thing happen. So there's always an opportunity to trade, right? Wherein, for example, now we know that we are closing down, based on the data, what's going on, we are closing down, shutting down schools, factories in China, right? Now, you as a regular worker now, factory worker, school teacher, whatever, you don't have anything to do. You don't get any pay. You don't show up to work, you don't get paid, right? Which in Forex, you show up to work, execute, carry out what you're supposed to carry out, and you get paid. So either way, there's always something. Maybe not this week, maybe next week. You understand what I'm saying? So that's why I love this market so much. I love this market, right? And for you understand the whole money flow and understand the whole concept, you will get there. So with that being said, we are on CAD Swiss, right? And I also like any currency, any asset class you guys would like to want me to take a look on, I'll be happy to do so, right? So on February the 10th, starting from here, on February the 10th, I'm gonna, just give me a minute, I'm going to get my drawing tool. I'm going to get my drawing tool, the great epic pen, so I can annotate on my chart, right? And this is how the patience come in. This is how the patience really come in, right? The money is made basically in the waiting, right? So the CAD Swiss has been going up from the 10th of February, right? And your job is to buy Swiss franc and sell CAD yen. Sorry, why this CAD yen still coming up? Because I'm a lover of the yen asset, the yen currency. That's why I'm basically really say that. So this is the handy dandy epic pen, right? So I'm just gonna do this real quick for you guys. So going up, down, and this trend, we can see it is in an uptrend. But guess what? You already make the decision, say, based on what's happening in the market, you're going to be a buyer of this safe haven asset with and the seller of the CAD. Right? So now, with that being said, and you do the homework, and with that being said, it's on an uptrend, and you want this uptrend to come to an end so you can continue, so you can execute your position where selling is concerned, right? So on the uptrend, we're going up. What we fail to see happen here, we fail to see it make a higher high, right? We fail to see it makes a higher high. So when we see fail to make a higher high now, that we can induce or selling, right? So I'm going to just change this color right here. Drop it down, pull back, down, pull back, down, pull back, down, pull back, down. This went a little higher. I'm still going to put it right there. And oops, a landslide, down, pull back. Right? So your first opportunity was right here. If you're not being very aggressive, your first opportunity will be in right here. And your second opportunity, right here. And the third opportunity is right here. Maybe you have a little loss or something like that. Right? And then we get a landslide. We didn't get a pullback right in this zone, but we get a pullback back to the 21 moving average. And if you're aggressive, you can also take that. And it's a landslide. So this is where the patience come in, and when you understand the market and what's going on. Right? Easy. 1, 2, 3. From you have half a brain, I think you can trade the market. Just understand what's going on and patience. And don't over leverage, right? And you will be fine. Excuse me, just a minute. Alright, we are back. Now, we see these landslide amateur traders coming into the market now when this big huge move already happened, right? This big where it is now, this big downtrend already happened. Now they are quick to come in to sell here at the low, sell here at the low, in which they can wait for a pullback and continue the mission, right? So when you analyze the whole market and the whole currency, and you pick a team, bear or bull, and we know uncertainty market, when uncertainty in the market, what tend to happen, right? When there's risk on in the market, what tend to happen, right? So is it a risk on or risk off? Basically, that's how I really look on it as a macro trader, right? So life in itself is more difficult than even trading when you understand what's going on, right? So I'm just spending a little time on this asset, right? So basically put these back on the H4 chart, right? So this is doing very well. CAD Swiss is CAD Chief is doing very well. USD Swiss is doing well, not so bad, right? And the price action remain the same, right? As the Swiss doing well with the sell-off, New Zealand Swiss doing very well with the sell-off. And if you just wait and wait for the execution, you will be fine. It's a landslide going on. Free money. This is free money. You see those yen, Swiss franc going across. All you have to do is stretch out and just take it. Stretch out and just take it. That's it. Right? So the price action remain the same. The price action remain the same. Right? I'm going on USD. No, the yens. No, I don't even need to go to the yens because we understand that already, right? But I'm just going to go through it real quick, right? And we talked about something last week or 2 weeks ago, where is the FOMC FedWatch tool, and I give you guys some homework, and very few put in the work and look at the charts. Look at the tool that I pointed out, right? Very few. So, yeah. This is just basic stuff. Basic stuff, basically. As the for this, I wanted this correction first. For me personally, to add an exposition. I was looking for this. A up move, a pullback, and a correction, then a continuation of the down move, right? A continuation of the down move, right? So I already have some sell position from the first week of January. From the first week of January. Normally, you have a huge sell-off and a fast rally, and then we on to the next. Year after year, seasonality trade, right? But I'm going to share something with you guys, right? One of the main reasons why I normally short the Japanese yen each from January each year after year. It's like a job that doesn't end, right? Doing my research, I understand that the Japanese yen have their taxes to be done on the 1st of April, which in return the demand for the Japanese yen increased from the first week, even the last week of December, to this April the 1st, right? So in order for getting all of those yen, right? In order to get all of those yen, you want several billions of Japanese yen or any currency, 50 to be exact, right? And you know you want it the 1st of April. Would you start buying those yen from months before if you know that it is needed at X time? Would you have done that if you know? Alright. This is my phone right here, right? iPhone. Right? If you know that the phone, based on your research, you know that the phone is going to be worth, say you bought it for 500 USD, and you know say the phone is going to be worth 1,000 within the next 6 months. Would you purchase the phone now and then sell it within the next 6 months? Or you wait till the 6 months, then now you purchase the phone and try to sell it back within that same aspect, right? So it's just a logic behind the trading which we need to understand. Good night. The logic behind the trading. Right? So that's why half the times when I hear a mention, I know what I'm gonna do before I look at my charts. Right? I know I'm gonna sell this asset. Right? So I look to my chart for technical. If the asset is not ready, no trade. If the asset is the technical don't set up, no trade. So most times the problem is when we over leverage. When we over leverage ourselves, we tend to put a lot of stress on ourselves as a trader when we over leverage. A small 100, a small 500 account, you want to turn it into 5,000, 50,000, 1,000. You're putting too much pressure on yourself. Get what I'm saying? Look. I'm just giving you a basic price action. Basic, very basic price action. Basic, very basic. Basic. Pull back, sell, pull back, sell, pull back, sell, pull back, sell. Jeez. I guess this is just too difficult, right? Change the moving average if you want, right? You can say when you're aggressive, 21 moving average, pull back to the 21 moving average. Here's pull back to the 21 moving average, pull back to the 21 moving average. If you are playing that, right? So if you don't understand the basics of these things, you won't be profitable in longer run, right? But it's when you understand the market and how it really work, right? And how it really work, then you will trading become relatively easy for you, right? Trading will become very relatively easy for you. Drill long even to a lower time frame, right? Up, down, up, down, up, down, right? So basically when I turn to my chart, there's nothing much to really do because I already know what I want to do. You know what I mean? But when you over leverage and things like that, you tend to put yourself on a lot of stress and things like that, right? So I'm gonna go into something else a little bit different for now, right? Because I don't really get any requests for any asset. I guess I'm doing very well in this session that I'm telling you guys about, right? So if you don't have any money to take my say trading coach mentoring, and you have time, if you don't have money and you have time, no problem, just show up to the session Thursdays. After Thursdays, take your notes, key whatever topic or whatever things I talk about, take notes, do your little research on your own if you don't have money and you have time, right? So without further ado, I'm going on to the FOMC Fed Watch tool. Come on, dirty dancing. I ask you guys for 2 weeks ago, show up, right? 2 weeks ago, show up. I always try to carry some nuggets into the sessions, right? So CME group, this is a Fed Watch tool. The 19 days from now, we are going to have a Fed meeting, right? Fed meeting. So let I enlarge the screen for you guys to see. And I was referring to what the possible chances of the next interest rate will going to be. 'Cause as a trader, we are trying to predict the future, right? As a trader, we are trying to predict the future. Only job that you have, predict the future. I will just capitalize on it. Predict the future. Similar with the phone, we predict that the phone are going to sell for X time by that amount, so we front run it, we buy it now, and when X time comes, we sell it for that. Basically, that's it. So I'm not trying to make trading very complicated. Now, this is a probability graph, right? And this is live contracts of where the banks are negotiating the future price of the value of a currency. These are live contracts. So you see this probability graph going up. These banks exchanging contracts, right? So 2 weeks ago, if you look at my video 2 weeks ago, right, this graph wasn't like this, right? And we care about the trend of the graph, the bar chart, the trend, right? That's what we really care about. We care about the trend. So 96.3% of the market are pricing in a ease, a rate cut, right? 3.7% pricing in no change. No change. The Fed funds rate will remain the same, right? And 0% say they will not be hiking, right? So as you can see, they are pricing in a rate cut and possibly two. So when you click on these, this is the March 18. So we already know there's a meeting March 18 from months ago. We know that. And we know so there's going to be another one 12th of April, June, July, September, November, December. So these things out there like that. Out there like that. You don't have to scratching the head or reading encyclopedia. Or, yeah, these things are just out there like that. So if you're willing to put in the work, pace yourself, over time, you will get there, right? So 96.3% of the market is pricing in a rate cut, right? So that is by this time. So the next month you will support a rate cut. They are pricing it in already. But what this now? Also in April, they're pricing in rate cut even more by 50 basis points, right? So it's like they are pricing in 2 rate cut within the end of the year or things like that. So as you can see, but nobody pricing in a rate hike. No one pricing in a rate hike. Everybody pricing in a rate cut. So that's why you see when interest rate cut or hike in the market, half the time not much movement because the market already priced that in. Right? The market already priced that in already. They are more concerned about what they are going to do next. Right? So central banks and monetary policy have to be careful how they are adjusting when you have sessions like the report, they give them statement, right? You should read the statement carefully and figure out if they are hawkish or they are dovish, right? Cool. So I'm giving you dings and dangs as you go along, and if you just take notes, put in the work, you'll take it trading to another level and stop the video game trading and the gambling trading. This is a business, right? Trade as a business. So we already know that they are pricing 2 rate cut, also no 0 rate hike. All the way down into June now, right? Rate cut, 75 basis point, more and more ease, more and more the market, more and more pricing a rate cut, What would be a surprise in the market if there is no rate cut or if there's a hike? That would have been the surprise in the market. You understand? That would have been the surprise in the market. And we can go on and on and on and on. 99% is 99% cut. We see the trend. The trend. We care about the trend, where it is going. Right? So, with that being said, sorry about the dog. It's my security. Right. So with that being said, the bank to bank, they are bank to bank, they are exchanging contracts predicting the future price. Right? They are predicting the future price. Right? Hold on, just a minute. Yeah. So this is a key piece, tool that I'm really giving you these guys, and I'm going to give you another key piece of information that you guys maybe add to your arsenal of tools. Right? The unique thing with the US dollar, even when the rates are expected to reduce, right? Interest rates are expected to reduce. The US dollar tend to gain some strength. That is the unique thing about it, right? Because foreigners, for example, like the the European, for example, investors, right? They are buying up the US dollars. They are selling their currency, like selling their euro, selling their as they are whichever as country currency it is, right? Selling that currency and buying the USD, right? Now, when they buy the USD, right? They want to buy bonds, right? They want to buy bonds, and in order to buy the US bonds, you need US dollar to buy bonds, right? So bond price tend to go up, increase during these time, right? Because normally when the Fed cut interest rates, is trying to get more spending or introduce more money into the market. So the Fed now, or the central bank now, will go to the New York Exchange dealing desk and say, hey, we are going to buy bonds. And whoever own a bond, them just buy it from them. In a nutshell. We could go in further details. Right? So, you know what is going to happen, so you just front run the move. Right? Buy bond, Fed, central bank, them soon buy it from you. Right? And when they buy it from you, you put your money in the bank, and you have more money. You buy the bond for $5, you sell it back for $10 to them, and you end up with more money. And when you have more money, you tend to spend more. If you don't have any helper at your house, you get a helper, you get a gardener, maybe you buy a new house, you buy a new car, or you have more money, so you spend more. Right? And that increase in GDP, right? Get inflation up, and things like that. So, I'm giving you just a key takeaway in how I really go about my trading. I don't just really just go to the charts and just trade like that. All the work is done behind the scene, right? You think big hedge funds, banks, institutions just look at the chart and just trade, buy, or sell. They have something behind it. There's something behind it. So we have a huge up move in the euro dollar, right? Basically all of the asset, all of the basically Euro who was European who was buying the US dollar, right? So somehow them run to them currency. There is some unwinding, right? So in order for sell for buy them currency, them have to sell the US dollar, right? So it's some unwinding. That's all you unwind. So the stock, the S&P, I think the stock market, or the, I don't remember what fell today. What fell with from yesterday to today, right? And when it fell, that is showing that investors taking their money out. And for me, my prediction, my conclusion is I could be 100, I could be 1000% wrong. But my conclusion is over in Europe, because they are paying negative interest rate, right? So US give them better for their investment, right? So for example, now they took their money out, which is the US dollar, out of the market, right? And then they'll have to buy them currency back. So that's why the euro gets strong, the demand for the euro. That's just my conclusion. Them take their money out and put back in their money into them country. For whatever reason, I don't dig to that yet. And I don't know. But that's just my conclusion. They take the money from one place and putting it to a next place. That's just basically it. Right? So I'm gonna leave you with that, with this few indicators for now, and just see how it all pan out. Remember, do the work is doing behind the scene. If you look on your charts for a trade, you will find a trade. I can tell you that much. You will find a trade. There is a bull or it a bear, you will find a trade. Right? But if you have a bias and you have a plan, right, you will execute precisely and more confident, and you will see your account positive, and you're building your business, right? So that is my take for now. So thanks for the turnout, and please like, share this video, right? And I appreciate any comments. So if anything I need to work on or make the feed a little better, or if you find it very interested, very informative and things like that, just leave it in the comment. I'll appreciate everything. So thank you for the turnout.